Welcome to September's Deal Clinic Live. I cannot believe we're in September. Amazing. This is a great month, September, not just because it's my birthday, but also because people come back from holidays, kids go back to school, and we as agents and investors can go back to business. So today is an exciting episode. As always, if you have any questions, feel free to drop those into the chat box. Tim and I will be sending them over to the relevant person as and when. If you are watching this on the replay, please do send your questions into admin@sourcinginvestments.co.uk. Now, as always, snippets of this will be going out to our social media on Facebook and Instagram, shorts on YouTube, and the full episode will be available in about a week's time on our YouTube channel, Sourcing Investments Limited. Now, I'm really excited about today's episode. It is a special episode because we have a power team member with us today. And we're going to be looking at something that can actually increase profit right from the get-go. We've found our power team member, Rachel Knight of Title Split, and her team have done an amazing job at this special strategy. So we have today with us Rachel Knight of Title Split, and our usual investor, resident investor, Tim Sanders, is back with us after cycling across Europe last month. So but let me brief for you on Rachel herself. So Rachel started out as a sourcing agent herself, so she's very familiar with this journey and what's needed. And she saw the potential of title splitting, I believe, back in 2017. She'll be able to tell you a little bit more about that. But she did a deep dive. She did a deep dive and became the expert in this strategy. Now, she trains not only agents, but also she educates solicitors and mortgage lenders with the nuances and the intricacies that sets her apart from the rest. We're happy to have her and a team as our power team member, and she has an amazing presentation. So today will be slightly different. We'll be allowing Rachel to present, and then we'll do Q&A at the end. So remember to drop your questions into the chat box, and we will address those to Rachel at the end of the presentation. Stay tuned to the end because we have a special offer for you. Okay, without further ado, it is my pleasure to introduce you to Rachel Knight of Title Split. Rachel, over to you.
Hello, everybody, and it's a September day and the weather is changing, but this is where we're really going to focus on how we can make money out of property. And here's the beautiful thing for you, whether you're a property investor on here today who's come in to look at what this strategy can make you money, or whether you're a sourcing agent today who's come in to look at whether you can actually source these deals, there is a lucrative opportunity for both today. So I am going to share some slides, and I do find it's a good way to just talk through the opportunity that's available. So let me just share. I'll do that now, and then you'll all see the slides and we'll be able to talk through this. So I'll put the full slide screen on in a moment, and you should be able to now see the slideshow. So let's start with who we are. So we're titlesplit.com, and my name is Rachel Knight, and I discovered this amazing strategy in 2017, well, just before 2017, because I knew there was such a big opportunity. And I myself was a sourcing agent at that time, and sourced deals from my clients. I don't do that anymore. I've just built my own portfolio. But since 2017, I've been building this through title splits. Now, why is this the strategy of cash flow and equity? And think about it from a sourcing agent point of view. As a sourcing agent, you can find a deal for your clients that's one property with multiple units within the property. Okay. So what is title splitting? So whether you're in the UK or outside of the UK, in the UK market, we have something called freehold and leasehold. Okay. However, this strategy is available all over the world. But in our market in the UK, because of the finance system, it makes this strategy very lucrative. So it is a process in which a property developer acquires a single unit of property and physically separates it into multiple units of property using the legal process that's in place in the geographic location at the time. So really for you, what this means is, okay, you are going to be able to source for your clients, or if you are a property investor yourself, you're going to be able to buy these properties that create multiple income streams, okay? And that is what we're after here. But we're not only after that, we're after multiple pots of capital growth, and I'll talk through that, okay? Now, let me just see if I can get this to move on. It's done it. Right, so our focus for today is going to be on unsplit blocks of apartments. Why? Because this is the biggest opportunity for both types of audience on this call today. And we all know that single lets in their own right are hard to make work at the moment in the market unless you get a particularly low buy price. But what we do with unsplit blocks of apartments, if we buy an unsplit block at market value, we can still add value. Okay, so I'm going to talk about this today. Okay, now let's talk about this. This is an example. This is a property that I own in my portfolio. And this was a property that I found, which was an unsplit block. Now, when I say to you, there are thousands and thousands of these available in the UK. And what's really important is that in the UK market at the moment, these are all owned by landlords. By default, the target market for this is landlords for an unsplit block. And these landlords are distressed. As we all know, we've got a new Labour government in the UK. A lot of landlords are thinking of exiting. So this is an amazing time to source this type of property. Okay. Now, what I'm looking at here is these properties already exist. Okay. So in the UK market today, they already exist. I'll talk about how many there are in a minute. The building is legally on one freehold. So literally, you will see these in every town and city in the UK. I was even looking, if we look in Scotland, the system in Scotland is slightly different, but the opportunity still exists. They're called multi-unit freehold blocks. And they look like when you're looking for HMOs, but usually the difference is, if you look on the front of this one here, can you see there's like 4 letterboxes? So often with a HMO, you know, everything goes into the same place. That's one of the clues we're looking for, although there's some great ways you can find these online as well. Okay, so the sizes is that the new apartment sizes are a minimum of 37 square meters, but older ones are still mortgageable. Okay, so if they're over 30 square meters, they are still mortgageable. And the landlord who buys this to hold in their portfolio is going to make additional money by title splitting it. Just by title splitting, you can make money out of these properties. They are not studios. This is really important. Sometimes on Rightmove, they will be advertised as flats. And when you look, they look like HMO all ensuite studios. So I am going to say, when you're looking at these properties, this is a really key tip. You're looking for something that has walls between the kitchen and the bedrooms. So if the bedroom is in the kitchen, you know, like in ensuite studios or what we used to call bed sits back in the day, if the kitchen and the bedroom are in the same room, it cannot be a flat, it cannot be title split and mortgaged individually. So this is a really important distinction if you go out and start looking for these properties. Okay, so let's move to the next slide. So I'm going to bust some myths here because this is really important. You may have heard of this before and you've been told that you can't actually do it because it's all about the deeds. one of the other things that gets set up is that sometimes mortgage brokers or particularly bridging brokers can say that you cannot title split on purchase. Well, you can, and that you know that the land registry makes the decision as to whether you can title split. Well, they don't. All that the land registry do when the documentation for a title split, which is freehold, and then the leasehold apartments being taken away from the freehold, which is what we show people to do. The land registry don't decide it. They just check that the paperwork is correct. This is really important distinction. Many people don't do it because they get told all they need is a solicitor. This again is not true. In fact, and this is not a criticism, solicitors in the UK, conveyancing solicitors are not taught to do this. And commercial property solicitors are not taught to do this. And the only time they ever do it is when a developer sells it, right? So what this means is there are thousands and thousands of these unsplit blocks that have not been title split because the solicitors have never been asked to do it, and the investors don't know how to do it or how to instruct their solicitors to do it. So you need a lot more than a solicitor to make this work, and it's a common misconception. In fact, many people who try to do it on their own end up going round and round in circles and getting bounced around power team members because they don't know how to get this done, okay? This is a really interesting point. The process is identical for commercial and residential property. So we can split mixed use property, and I'm going to show you a title split on a mixed use property for one of our clients later, but it can be commercial, it can be residential, it can be mixed use, it can be land. We can title split vertically, we can title split horizontally, okay? The use of the property is not relevant to the land registry. This is really important. Anything can be title split, but not anything can be financed. And this is really important. So you have to make sure that all the things work together so that we can get the finance out at the end, okay? You can't split apartment blocks on purchase. That is a myth that's out there. Rubbish, 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 rubbish. That's what we teach you to do. Exactly. And even in terms of us trying to find solicitors to work with our clients, we have interviewed solicitors who are saying all over Facebook or wherever else that they are able to do it. And when we go and interview them, we know that they can't do it. We know that they don't know the nuances and intricacies, because the solicitor's job is not to tell you how to do something. The solicitor's job is to do what you're asking to be done. It's a different thing. So the solicitor completes the legal bit of the transaction, but all of the other things have to be right for you to be able to create a title split. So we teach our clients to title split on purchase. You don't have to, and by the way, that saves you an absolute fortune. You do not have to wait for the leasehold to be registered at the land registry to get funded. This is a myth that was created by a few sort of, I'm going to say, bridging brokers who were getting massive bridges. So they were getting you into a bridge on day one, okay, and saying that you can't title split it until you own it. Wrong, wrong, wrong. We can show you how to split it on purchase, right? And the leases do not have to be registered at the land registry to get funding. You do not need planning or permitted development. In many instances, if you buy a block that is already existing, you don't need planning or permitted development. But if you do a property that isn't flats already and it's residential, you do need planning, right? So it's a case of really understanding all of the nuances, okay? So this is something that's really important if you decide to do this strategy. Now, for sorting agents, what I'm going to say is the low-hanging fruit is those unsplit blocks, because they do not need planning or PD rights. They already exist. So it's about capital growth and it's about cash flow. So I've got to talk you through this. Now, many foreign investors invest in the UK because of this amazing thing that I'm showing you on here. And us UK investors also can massively benefit. So between 1992 and 2022, our average house price in the UK grew from £52,000 to £270,000. So you can see it on this chart in front of me. Now, this is not my data. This is Zoopla's house price index, and it comes from land registry data. Okay, so now we had a blip in 2008, and some people will remember that, where house prices dropped, but they only dropped by 15%. And that's where you see it go from 181 to 154. And then it went back up. Now in 23, we had another drop after the Liz Truss effect. She hates it named after her, but unfortunately, Mrs., that's exactly what happened. So I seen her, did she recently storm off a program because somebody asked her about it? Anyway, she's crazy, isn't she, for doing that? She crashed the economy. So it grew by 400%, and actually it dropped to about 266 last year, the average house price, that's 2023, and it was only 2.55%. So although we get corrections, capital always grows. And if you think that's going to continue to happen, because there's these people that go around saying, no, capital growth will stop, but no, it won't. House prices in London are way higher than the rest of the country. So if that's up there and we're here, it's going to continue growing. That's the way it works. That's the way capital grows. So real estate property is a massively positive investment in the UK. Okay, which is why you're all here, because you're either sourcing deals on behalf of your clients or you are actually a property investor yourself. Okay, so this is that block again. So I want to show you it. So we split away, we bought it as a multi-unit freehold block, and it is 3 two-bedroomed apartments. Okay, that's what it is today. We split away the leasehold apartments from the freehold of the building. And the freehold of the building, which is the roof space, the ground, and the shared areas. So even the garden at the front here, that would be part of the freehold. The hallway inside would be part of the freehold. Now, the apartments, if you look on the left-hand side on this picture here, you've got the common areas. They're in the hatch brown area. So you can see as we walk in the front door of the property, that's brown because that's a shared area. That's part of the freehold. But the on the left-hand side of that is the actual apartment, and that is the leasehold apartment. Okay, so that's how it works in the UK. In some geographies, they call it strata, but this is basically the freehold is commonly owned or owned by the landlord, and the leasehold apartments are sold off on long leases. And it's these long leases that the sold off price, or we call it comparable price, that gives you the capital growth. If you do not split a block, if you are a landlord on here today and you have not split a block, it is not worth the split value. And I will take you through this later. Now we have opportunities for land, we have opportunities for mixed use, we have opportunities with commercial. Commercial property is slightly different. The smaller units cost per square foot is bigger than the cost per square foot for the bigger unit. Okay, so that's how we make money out of it in commercial. So how many unsplit blocks do you think there are in London? Now I'm going to ask, because I don't want you to fall asleep, you to type this in the chat box. And I don't know whether I can see the chat box. Can I, Bonnie? I don't know whether I can. Maybe you need to tell me what they've said in the chat box. So what I'm going to ask, please, is how many unsplit blocks do you think there were in London in June 24? This is when I last looked at this, June 24. Anybody want to hazard a guess? And if perhaps Bonnie or Tim can come off mute and just tell me what it says in the chat box.
Yes, of
I
course.
might be able to see it,
Rachel.
actually.
You
Oh,
should
go
be
on,
able to
Bonnie.
see it, but we've got Vasca has said 50,000.
Okay, Vasquez said, yeah, okay.
Jan has said 23,060.
That's very specific.
Very. Tim has said 15,000.
Yeah.
John has asked, are tower blocks included?
Yeah, so I want you to think about this. This is all blocks. It could be a small block of like this one I just showed you with 3, or it could be big tower blocks as well. And it's the actual block number. So if if it's got 20 flats in, it's a block. If it's got 3 flats in, it's a block. And these are the unsplit ones, not the split ones. So they've not been sold off. They're rented. Any others? Right, that's giving me a good clue. Okay, so I am going to share this number with you. You're going to be shocked. Somebody did actually get close. Okay, So as soon as I open the chat box, I can't move my slide on. So hopefully I can move my slide on now. Come on. Okay, sorry. I am pressing the button to move. There you go. It's moved. So 55,796 unsplit blocks in London. Now, I am sure you will agree that is huge, right? Now, I want to explain to you that clearly some of those unsplit blocks in London will be owned by big housing associations. So when we say an unsplit block, we mean it's one freehold and it has multiple addresses. Here's the tip: one freehold and it has multiple addresses. So 55,796. Now I am going to tell you the scary thing is that 20,000 of these are owned by private landlords. Now, what does that mean? That means landlords who are paying Section 24 tax. That means landlords whose portfolio mortgages have gone up to 8.5%. That means portfolio landlords who want to sell. And there are a lot of landlords who want to sell. Now, the issue that those landlords have today is that if they put their property on the market, their tenants will know they're selling and they may lose rental. So these landlords are stuck between we call it in the UK, a rock and a hard place, okay? They can't put it on the market, they can't sell it, so they are looking to sell off market. Are you interested in finding these blocks? I am, because they make a lot of money, okay? So move to the next one. So this is examples of the sorts of properties that can be used for commercial title splits. And by the way, those blocks in London, there are commercial properties there and there are residential properties there. So there is, and when I say, and a lot of them are mixed use. So if you think as you drive into a major city, on the right-hand side and the left-hand side, as you're driving in on a major arterial road, there will be buildings where they've got shops at the bottom and they've got the what looks like offices or apartments above. Many of those are unsplit blocks. In fact, I remember a few years ago, I was driving through London and one of my marketing team was recording me talking about them being unsplit blocks on either side. And somebody posted a message to me saying, this is ridiculous. All of these blocks are split. They're not unsplit blocks. You don't know what you're talking about. Well, I'd love that person to be on this today to tell them there's 55,796 of those things that they told me didn't exist. Right. And it's a common misconception, even with solicitors, that they don't exist, because solicitors only ever really split apartments upon sale. That's why they don't know how to do it during ownership. That's all they're asked to do by developers, and they split them on sale. Now, splitting them during ownership is more complex, and if we don't get everything right, we won't get the exit finance we need to get the money out of the deal. So we've got to get everything right. Okay. So these in front of me are examples of apartments that are for commercial and mixed use. Now, my clients, we teach our clients when they come on the in the room training with us, how to go and find these deals off market. And what I can tell you is there are not a lot of people looking for these same deals. So when we write to landlords, they are interested in talking to us. Okay. It's really important that you understand that I'm going to use Birmingham as an example now. Birmingham has about 4,500. That's not an exact number. And only 25 of those apartments are on the market. Those buildings are on the market. So it's less than 0.5%, about 0.5% on the market. It's hardly anything goes on the market, because the landlords are between this rock and this hard place. So it's such a massive opportunity for the right sourcing agents or the right people to go and find these properties and source them on. I mean, I have clients who are looking for these properties. You know, we don't do sourcing in our company, but our clients are desperately looking for these properties. Okay, it's really, really important. Okay. So Who are we? Titlesplit.com. Well, this company was started in 2017. If I'm really honest, I started the company. I started Titlesplit in 2007. Started the company in 2020. I started the company because I still cannot believe that people do not understand the size of the prize. Right. And I couldn't get to the prize. So I had to find a way to do that. Now, the gentleman on the right there, Adrian, he trains with me in the room. I don't do all the training, but on the mastermind training, I do most of it. Okay. And we are the experts in this strategy. Now, very interestingly, this week, there was, this is really important. Property 118 had Shaw book writing that 37% more mortgages were being applied for these unsplit blocks. So what's happening is the momentum is growing of investors looking for this. So if you are looking for the right property strategy that is not yet saturated, where there's a lot of off-market deals, it is this strategy. And we are the people that are the experts at it. There is nobody else that understands it the way that we do, which is why I guess Sourcing Investments approached us to come and work as a Power Team member. Okay. So why is it perfect? Well, you can build big HMO cash flow from this, because these properties go for, if you have one house and it's turned into 2 flats, you're looking at about 68% more rental income for 2 flats versus 1 house, which is quite good. And obviously the more flats that are in the building, the more cash flow you're going to get. You will massively grow your capital, because instead of 1 single let, when you buy a block of 4, you create 4 single lets. You can even turn them into mini HMOs in Article 4 areas. I'll come to that. Title splitting is the perfect strategy for pensions, SAS and SIP. So if you've got older people that are looking to really grow their portfolio, I'm going to give you an example of this later. It is a great way to get money into your pension scheme. So I want people not to think pensions don't apply to them, because they do apply to you if you have any excess profit in your business. Okay. Freehold, leasehold, you buy one property, create many, and it's the perfect strategy for long-term legacy profit from property, or that elusive passive income. Okay, it's as passive as it gets. You know, it's a funny thing with passive income, because when you're in that active property investor, sometimes it doesn't feel passive because you're still doing another project. But what I am going to say is, for us in my portfolio, me and my partner, it was when COVID hit that we realized we really did have passive income, because it just kept rolling into the bank account when everything else stopped. And I think that's really important. So great news. When you are ready to step up to title splits, you will be stepping up to a strategy that gives you cash flow and capital growth. Foreign investors really need to look at this strategy, because in the UK, you've got to make your money. If you have got foreign investors on here, you have to make your money work harder, because you pay higher interest on your mortgages. So getting these blocks and having multiple properties in them is going to help you to work your income harder. On average, we get 20 to 35% higher valuation at refinance with a title split block versus a block that's not split, MUFB. And we can show you the perfect stage to title split it to make the biggest profit and have the lowest cost. I'll tell you now, on purchase is always best if you can do it, okay? If it's possible. And immense. So we come back to this one. So this particular property, this is the valuation it got in November 2022. And we actually purchased it because we'd had it on an option, which is a £1 deal. We'd had it on an option since 2021, and we purchased it in February 2023. It was 1 freehold originally. It had 2,700 rent across 3 flats, and the rent per annum, when we'd finished it, the rent per annum was £32,500. The rent, now, the way that title split, the way that block valuations work, this is before you title split, is that we take, it was a 9% yield in the area, and we do 100 divided by 9, and that gives you the 11.11, which is the commercial multiplier, right? Now, this what I need you to understand is if you do not split a block in the UK, the banks value it like a commercial property. They value it the same as sui generis or 6-bed plus HMOs. Okay. Now, what I'm going to say to you is, whilst you may have been told that's the best way to get a valuation, those valuations do not grow in line with capital growth. It's not sexy, but you're probably not been told this, right? So what we do is this particular block, this is in November 22, was valued at an 11.11 multiplier of the rent, which was 359,964. So it was valued at 360,000. Okay. However, right, that was not enough because we were buying it for 255. Okay. Now, when I say we were buying it for 255, because we'd had it on an option, we actually refurbished it before we purchased it. Yes, you are hearing right. We refurbished it before we purchased it. Quite a clever strategy, but we show you how to do this, right? Now, residential split value in October of 22 was 155,000 a flat. So if you add those three together, that comes in at 465,000. So remember on the previous page, it said 359,964. That's the MUFB block value. 465 is the split value. How does that actually work? So this is my favorite slide because it just shows you. So we bought it for 255 and we'd spent 90,000 on the refurbishment. So you can add those together. That gives you a 345 valuation. Okay. So 345 spent on it. It was then valued at 359,964, 4.33% growth. I don't think so. It's not worth getting out of bed for that deal. You're not going to be able to persuade your clients to take a deal on like that. But this is what the deal really looks like. Now, because we've title split it, and by the way, I title split this on the day I bought it, right? So it's now 155, 155 plus 155. That's 465. And that's an additional 29.18% capital on day one. Now, if you remember back to my little chart that showed the capital growing from 1992 to 2022, that is now primed to grow in line with capital growth. And here's a really important number that's been published recently, and that is UK capital growth is expected to grow by 20% in the next 5 years. So if that's 465, and we times it by 20%, it's going to grow by another around 100,000 in the next 5 years. That is capital growth. Now, what's really scary about commercial valuations is that they can stay the same. So that 359,964 will probably not grow. Okay. And I spoke to one of our mortgage brokers this week and said, are you getting a lot of down values on sui generis HMOs when they come to their 5-year anniversary, or multi-unit freehold blocks when they come to their 5-year anniversary? And he said, yes, it's not a down value. It's a market value based on block or rent and yield. So you cannot have capital growth with that strategy. Okay. So that's a fact. Not my rules. That's the way the banks work. Okay. So would you like the choice of the best valuation on your project at the time? That's what title split gives you. So do I want a commercial mortgage? That's a better valuation. Yes, please. Might be on day one that's the better valuation. Or do I want the buy-to-let mortgage valuation 5 years later because that's better? Oh, yes, please. I'll have that. With the title split block, you can choose which is the best valuation. There is no other strategy where you can choose which is the best valuation. Okay. So this is how we build a multi-unit freehold block. We buy multi-unit freehold blocks, we refurbish them and we title split them. And this is how we build a portfolio of them in 5 years. This is based, so my portfolio is in the East Midlands. So I'm not in London, but this strategy can work in London. Your cash flows will be lower, but your capital could be higher. Okay. So this is how we grow it. So in 2000, and this was me, I did this a few years ago, but this shows. So on my blocks, I'm getting about 1,930. Even if that was £1,500 cash flow on a block, you get 1 in the first year, you get 2 in the second year, you get 2 in the third year, you get 2 in the fourth year, and you get 3 in the fifth year. Now, that is not a massive amount of property purchases, okay? But it gives me, if I do 4 apartment blocks, it gives me 40 single let units. And those 40 single let units will generate that 1,930 grows till we get to 19,300. Now, it's really important that you put your rents up as well, because this is going to give you, you must do that, particularly now we've got the Labour government. You need to put your rents up every year. It's something I say to everybody. So we can have a portfolio cash flowing between 200,000 and 231,000 a year by building title split blocks. Our clients are desperate for people to find them title split blocks. There are not many sourcing agents who understand this strategy and how to make these deals stack. But by working with us, you can learn how to do that. Okay. So this is a commercial property. Okay. And I want to put this one on the screen because this is quite sexy numbers on this one. So this commercial property is again in my portfolio, right? And we bought this property last year, which was 2023. Okay. Now on this one, we paid 875,000. Again, it is in the East Midlands. It's not in London. Very pretty, isn't it? The day we bought it, a few days later, we had to come along because there was a leak and our builder was on holiday and there was Rolls Royce parked outside the front and like the car park's full of high-end sports cars. So it's quite an affluent area. Now, this is a 7-unit commercial property, right? But what I want to tell you is we bought it for 875 and we have it in our pension, something called a SAS, right? And we actually intend to keep it in the SAS for now as a commercial property. However, if we are actually asset managing it to put the rents up. So we have 7 separate rents. And at the front there is a commercial, a restaurant. But because this is small units, instead of trying to rent out the whole of this commercial property, and we can title split them, we get a much higher cost per square foot for those small units. Okay. So that's how we make money from this in commercial property. Now, here's the interesting thing. If we turn this into apartments, because it's something called user class E, which means under permitted development, we could potentially turn this into an apartment building. It would fit in 13 apartments. And guess what they would be worth, title split? £2.1 million, right? So this is the types of opportunities that open themselves up to those who understand title splitting. Okay, so we wanted to share that one with you. I share on here mainly my own, but this is a customer case study. So this is a landlord who had a block and he came and got educated himself how to get the money out of it. What I want to tell you is there are many landlords out there who have these blocks who are not educated. So I want you to think of it from both perspectives. If you're a landlord and you've got blocks, you can make a lot of money out of it. But most of those landlords are exiting and do not want to do this. Okay, so this particular gentleman, now I haven't put a picture of his building on because he hasn't given permission for me to do so, right? So this is but it's a very similar building. And on the bottom, it has 5 commercial units, right? And on the above that, it has 4 residential apartments. So if we were drawing a picture, you'd have 5 on the ground, 4 on the first floor, and then he also has space above for 3 extra apartments which haven't yet been built. Okay. Now they've got planning, by the way, these 3 extra apartments. So he's got the lawful use to do it, but they haven't yet been built. Now, this particular landlord has got a bit of a mortgage on this and he wants to release some money so that he can build the flats on the top. And he comes along to me and he says, Rachel, I had the building valued at £750,000. And I said, okay, this is in Wales, £750,000 for 5 commercial, 4 residential done to a high standard and 3 that are not yet done. That doesn't seem right. So he said the bank had offered him a 7.5% fixed rate mortgage for 5 years. So we worked out that on 750,000, if he borrowed at 70%, right, that would give him 525,000 from the bank. And that would be the mortgage over that 5 years would be 196,875. So it's everyone following me. We do 700. I'm doing it on my calculator. So 750 times by 70% gives you 525, times by 7.5% gives you 39,000 a year. And we times that by 5 years to get to 196,875. So that's how we got to that number. Okay. So I said to him, whatever you do, do not take this mortgage offer because you will tie up your money for 5 years. Okay. And you'll only get 525,000. So this is how we showed him to do it. So what he did instead, and this is a little picture of that building. So 5 commercial on the bottom, 4 residential on the first floor, and 3 residential ready to be developed on the second floor. So I said to him, in your area, how much are these types of apartments selling for? And it was a city, so they were selling for quite a high price. So it was 175. So I said to him, so that means 4 apartments on that first floor there times 175 equals 700,000. Hang on a minute. You've just been only given 750 for the whole building. So title split, these apartments are worth 175 each. I said, well, what we're going to do is that's the job, the thing you need to go first. And that's what you need to do first, right? So the first thing we did is split off the first 4 apartments. And he got them valued at 700. We borrowed 75% of that. That's 525,000. It's the same amount of money, but he's only financed 5 apartments. Now he then said, I've got one of these SAS pensions, but I've not got much money in it. I've only got 100 grand in it. So I said to him, how much are these? Let's just go back. How much? Sorry, I'm going back quite a lot there. Didn't mean to do that. Let's go back to where I should be. That's back. So I said, how much are these worth at the bottom? You know, these commercial? And he said, probably about 100,000 each. I said, but you've only got 100,000 in your pension. So you can only put commercial property in pension, by the way. So you want to put this in that other, in the pension, but you've only got 100,000. So he said, yes. So at the moment, don't know whether this will change in the future, but at the moment, you can put 60,000 a year into your pension, tax-free, right? But you can backdate it for 3 years. So I said to him, what we're going to do is we're going to sell one of those to the pension, right, for the 100,000. And then what we're going to do is you're going to put 200,000 profit out of this company into the pension tax-free for the money that you haven't spent for the last 3 years on your pension, 60,000 a year. And then there was so anyway, the number's 200,000 that you can put in. I think it's 40,000, 40,000, then 60,000, then 60,000. Long story, it changed, right? So he's now going to use that 200,000 to buy 2 more of these properties. So that's putting that money in the company. He then uses the money from the pension to refurbish these 3 at the top, right? Now he's got £700,000 already in his buy-to-let company in year 1. This is year 1, right? In year 2, he buys 3 into his pension, and he's done with the money he got from the pension, he's done the refurb, and he's put the others into his buy-to-let company. These on the right are worth 1.225 million. These on the left are worth 300k, and he's got 2 more to get into his pension over the next few years, right? Or he leaves them where they are. This becomes the freehold company. This is the leasehold company, and this is the pension with leasehold apartments in. But his total value, instead of it being 750,000, is 1.725 million. So we started with a block value of 775. We put the refurb costs of the extra flats, which is 200, and he came out with a 1.725 million valuation, which is 76% capital uplift. Isn't that amazing? Now, what I want you to think about is, well, I haven't got a, if you're thinking I haven't got a block like that, imagine if you could get your hands on a block like that, because that landlord has had his block valued at 775. It's not a below market value purchase. At that value, that is the market value. And this is what we do to add value. Okay, we refurbish and then we title split. And there are hundreds of these blocks out there in every city in the UK, thousands that you can be sourcing or buying, but you need to know how to get hold of them. Now, this is the offer we're going to give you today. We do a further masterclass, which is 2 hours on this strategy, okay, which you can buy today for £37, because I think this has been free today. You've come along and got this free today. So you've had quite a lot of information, but there's a lot more information to share with you that I cannot share in this hour, okay? So you are going to get an offer now. Whilst you're on this call, you scan that QR code with your phone and you can buy our masterclass for £37 on this versus 97. We have various dates for the masterclass, so I'm really excited if you come along and join us for the masterclass and come and find out how you can do more with this strategy, which is the most exciting strategy in the UK at the moment.
Rachel, that's amazing. Thank you so much. I have a plethora of questions.
I bet you do.
I really do. So we're gonna go through the questions as much as possible. Anything else that we aren't able to cover, I will email those to you with the names of the investors that have written those in. Okay.
Yes.
Okay, perfect. So the first one comes from John Stevens. He's asked, if I have or purchase a mixed-use building that are on a freehold but have had their own registered address, do I need to contact building control? Sorry, do I need to contact building control? If so, are building control likely to want you to add additional insulation, soundproofing, fireproofing, etc.?
Right. So the answer to the question is building control, and you already know the answer to this anyway, because it's probably why you asked the question. Building control are getting tighter on this. We're running an event for our clients this week. So we have onward training and we have clients that are part of our program. And we're running an event for our clients this week. And one of the things that's in that event is sort of what's changing in legislation. So you've asked about soundproofing, but I'm also going to cover off EPC, right? So in terms of soundproofing, the answer is every single time you involve building control in any HMO or block project, there are going to be, they could come and demand that you put extra soundproofing in. However, what I'm going to say is the costs of that are not massive if you compare it to that 25 to 35% capital uplift. There's a more difficult one coming down the line for everybody, but it's a great opportunity, because the other thing is that Labour have now said we've got to get the EPCs up to a C, right? And a lot of these landlords who own these blocks, the EPCs are E, D, if you're lucky, right? Some of them might even be illegal at this stage and be an F, right? So what I'm going to say is, I would turn it on its head and look at it as an opportunity rather than a disadvantage, because this helps us negotiate better prices with the landlord that we're buying from.
Okay, amazing. Thank you so much for that. And obviously, John, as Rachel has mentioned, if you need anything further, please feel free to use the QR code and join the full masterclass where you'll learn even more. Unfortunately, we've only got the hour, so Rachel's had to condense the main parts into these 45 minutes. So John has asked another question. I have been looking for blocks in the southwest, but currently people seem to want the split price for the freehold block. Some don't even have separate utilities. Are you seeing much of this?
Yeah, absolutely. And what was the name of the person? Sorry.
This is John Stevens.
Sorry, John. I just want to make sure I'm answering your question. So, John, the answer is yes. It's exactly how estate agents value them. They don't understand how to value them. And so what happens is the landlord calls an estate agent out. The estate agent says, oh, flats in this area go for X. And then they get valued at X. And they're not worth X, as we already know. Now, what then happens is when a bank comes to value them, when they go to sell them, and this is what happens all the time to the ones that are on Rightmove, the bank comes along and does a down value, but I do that in inverted commas because it's not a down value, it's an actual real valuation based on rent and yield as a block. So we call this the landlord hasn't felt enough pain yet. John, if you're looking at the ones on the market, that's always going to be a problem. You need to find these off market. Okay. And what we teach people to do is do very creative solutions to give the landlord part of what they want and to get you what you need to make money out of this.
Brilliant. Perfect. Thank you so much, Rachel. I've got a couple of questions from Vasca. Vasca actually asked this question, but I believe this was answered. I was keeping my eye on the chat box. So he asked, can you benefit from title splitting a high street style unit with a commercial unit on the ground floor and a flat above? I believe you did answer that.
Yeah, that was the example I showed you. It was quite a complex one. I did show you a complex one. I think what I'm trying to do there is really say to you, this is a complex strategy and there's a lot of moving parts. And if you know exactly how to do it, you will make money out of it. Our clients are making money.
Amazing. He also asked, typically, how much do you gain from a title split and how do you gain from it? Well, Vasco, I think in order to know how to gain from it, you're going to have to join the other masterclass. But Rachel, can you shed some light on that? How much typically can you expect to gain from
25 to 35%. So that landlord that I showed you, that's over 70%. That was mental. And that's because he had a really low mortgage on it as it was today. If you were buying it new, that block, you would typically, I mean, you think about that. That landlord had the block but built valued at 750, right? We knew that the split value was 1.725 million. It's massive. That is massive. Are there opportunities like that out there? Yes, there are, but I don't oversell and underdeliver. So I think for me, when I'm doing them in Nottingham, where I do them, I get about 29%. So that's the exact answer to the question. I get about 29%. And every single one I do, I seem to get the same amount. Now, I'm going to give you another example. I'm just doing a church at the moment. We don't do big deals. It's not my thing. You know, it's not my thing. I said that with that great big commercial building, but we're not. I don't mean, I don't want a 40 block of apartments. I don't want it on my mind. I don't need it, right? So we're currently doing, one of the projects we're currently doing is a little church that we're turning into 2 bungalows. And it's stone, it's Derbyshire stone, it's in the Peak District. That we bought for 140. We're spending about 100,000 on the refurb. We haven't finished it yet, so that's not an exact number because I can't tell you the exact number till we finish it, because as everyone knows, you always end up spending slightly more than you expect. But we expect the end value to be about 400k. So you think even if we spent 120, so that would be 140 plus 120, that's 260, and we'll exit out at 400,000 valuation. So that's pretty cool, isn't it?
That's amazing. That's amazing.
Yeah.
Thank you for answering that. Vasco has asked, how much capital is required to benefit from a title splitting property strategy?
£1.
Amazing. Okay, come on, it doesn't get any better than that. Tim's smiling, and I'm sure Tim has
£pound plus the cost of the option agreement with the solicitor.
Amazing, amazing. And I'm going to come to Tim in a minute because I can see him smiling. Pratma has asked, if we have an option agreement, can we title split during the lease term or wait until the term has ended and do it at the purchasing time?
So what the exact answer to that question is, we have an option period and we title split on purchase. So the day we buy it.
Amazing, amazing. Tim, I'm going to come to you. I'm going to come to you, and then I'm going to see if we can fit any of the other questions in. We've only got a couple left.
I'll be quite quick because I don't think there's a huge amount of value I can add here, apart from to say it's very captivating and very exciting. There's a lot that can be done. It's a lot of moving parts, so definitely needing the expertise, needing your team there for sure. But yeah, I was completely captivated through the whole thing. Good to know that there's no minimum amount of no minimum amount of capital needed. And I think, to be honest, it's probably better for the guys here if we crack on with the rest of the questions, because there's not much value I can add here apart from to go. Great presentation, and yeah, very exciting to hear more.
Thanks,
Okay,
Tim.
perfect.
I think
I thought you were going to. Sorry, go on, Rachel.
I think it's probably worth. I've just pulled up because literally it's on my phone. So if I'm putting my phone up to the camera, so you can see this is completely genuine. So it's one of my clients this week, and it was Property 118, which is just, they have a platform where people see, stuff. Anyway, this was a headline from Shawbrook. Landlords are increasingly investing in MUFBs Shawbrook. This was the 3rd of September 2024. So it really was a few days ago. Professional landlords are increasingly turning to multi-unit freehold blocks, MUFBs, as a lucrative investment option, according to Shawbrook. The lender has reported a 14% rise in landlords looking to invest in this property type in 2024 compared to the previous year, right? Also, the value of mortgages being sought for landlords on these purchases has risen by 37%. We are driving that. Now you've seen us, you'll probably see us everywhere. It is very seriously the most lucrative strategy now, and the banks are realizing. Now, something I'm going to say is that our clients who are in our mastermind program get access to a power team of professionals that we have trained. Those people, I can literally now give you the right solicitor to get the title split done, the right mortgage broker to get you the right mortgage products, the right solicitor that's on the bank panel to get you the mortgage through the bank in the right way. And that's what we're doing. There is no other educator doing what we're doing, which is, I'm not just interested in stacking them iron and getting them through. I want my clients to have people who can help them, who really know how to do this. And because we're training bank panel solicitors, we don't do anything dodgy. Everything has to be done above board. But the panel solicitor, because they've sat in my training room and they understand the title split process, the stuff goes through like a breeze. I'm testing it with client after client. So it's just so exciting. And when the banks are starting to stand up and talk about it, I know we're doing the right things.
Yeah. It means you've made a difference in the industry. It really does, doesn't it?
It does, yeah.
Okay, I've got some other questions. We've still got a little bit of time. Vasco has asked, for a title split of a freehold block, will the individual properties then be leasehold?
Yes.
Yep. Okay.
Yeah.
Okay.
Absolutely. Today, and can I just say the other thing is the system is changing in the UK. There's new leasehold laws, but we've been training the new system since 2020. So you're going to have 990-year leases. You're going to, they'll be leasehold, yeah. So we show you how to structure all that and how to do it.
He's asked us on the back of that, presumably you will also own the freehold land afterwards?
Yep.
Amazing. Love a bit of freehold myself.
Quick question on that then. Is the price for the application different depending on the length of lease that you want?
No, because I'll answer that really simply, Tim. All leases created today for residential property, and I make that a very distinctive, have to be 990 years by law. And that only changed on the 23rd or 24th of May.
Amazing. Okay, we have John's actually asked about the masterclass. Do we get told the ins and outs of how to do things on the masterclass?
So, right, I'll tell you how it works. The masterclass is going to give you more information, and we then invite you to a 2-day event, and it's not expensive. We give you an offer on it. In fact, we don't make any money out of it, but that's where we'll give you more information. And most importantly, I did mention this to Bonnie beforehand. Most importantly, The masterclass is online, so everybody can do it from everywhere. The 2-day event you have to come to, right? And that's where we'll teach you to source these deals, ins and outs of sourcing these deals, stacking the numbers, how to negotiate an option on them, those things.
Amazing, amazing. And as I mentioned, excuse me, as I mentioned earlier, this is like a very condensed, it's such a complex strategy. And as you can see from what has been, you know, just what Rachel has gone through today, the complexities, the intricacies, all the nuances, there's so much we could only present with the 45-minute. Rachel's done incredibly well to condense the important parts into this, but I would highly recommend that you do, if you're interested in this and delivering it to a high standard, that you do join the masterclass. I've got a question from Minhaz. We've got literally a few minutes. What are the risks of title split, Rachel?
So the risks of actually doing it properly are not a risk, right? There's no risk. If you do it wrong, though, it can be quite painful. I'm going to give you an example, right? I have a client who joined our program after this happened, who had not done this properly on a property that he title split in, that he didn't title split, he turned into apartments in London. And the council, because he didn't have the right permissions to do that, made him turn it back into a house. Now, the risk is not him getting educated and doing this properly. The risk is trying to do it and do it wrong. It is scary. It is such a minefield. And that is why many training companies don't do it, because a lot of training companies want to stack it high, sell them, get you all through the door and send you off. This has to be an ongoing support thing, because title splitting is so complicated. Another example is I had a landlord come along and talk to me who's got 3 flats. He's got loads of flats, but he's got 3 flats in London. Turns out he only had, no, he's got planning for 3, he had planning for 3 flats in London, sorry, but he'd created 2. And one was a duplex with 2 bedrooms and one was a flat with 1 bedroom. That was not, he didn't have permitted use for it. So he was in that position. Another one that happens is people don't do it properly and then they go to title split it and the bank won't finance it. That's one of the biggest things that happen, right? And the bank won't give them the uplift because they haven't done it properly. So the risk is in getting it wrong, not in getting it right. In getting it right, there is no risk. There's no risk.
Amazing, amazing. And I think you just answered one of my questions, because my question was, what is the most common issue that you find when an investor or an agent goes to do the title splitting where they haven't had any expert advice or guidance or anything like that?
I'm going to tell you the most common issue that our clients have, the ones who've been trying to do it for a while, not the people who've, so if you've come along today and this is the first time you've seen it, you'll go, surely it can't be that hard. And that's what people think. And what's happened is they've gone to a solicitor, they've gone to an accountant, they've gone to a mortgage broker, and everybody's told them to do something completely different, right? And they just go around in circles and they cannot get the help they need to do what we would. Now, that's why very quickly when I started training this, not when I was doing it myself, because I went through that as a developer. I've done property since 2005, you know, but in 2017, when I started doing these, it was like I felt like one of those ping pong balls getting kicked off the walls, you know, I was going round and round in circles. And in the end, I just thought, why is this so hard? And I even went, because I'd spent 30,000 on my property education. By the way, if anybody balks at that, best thing I ever did, because, you know, we've now got this portfolio to thank for it. But I literally went through to my mentors, and I'd paid for private mentoring, and I went, I don't want to do HMOs. I'm getting old. I'm long in the tooth. Can't be bothered. I want to do single lets. I want to do title splits, and I want the capital growth. And they told me, we don't know how to do it. And I'm like, how can you not know how to do it? There's nobody that does it. And so I kept going around on this ping pong ball, and eventually I had to go and find out how to do it myself. And obviously that included making some mistakes. So I split off a piece of land that I didn't want to have, split off, and is now still sat in my portfolio as a little like duck cat. But, you know, it's one of those. And what I am going to say, though, is now you can learn how to do this properly. Now, what I'm going to say is this goes further than that, Bonnie. Because people come to us and they look at this and they go, do you know what? I'm going to wait till I've got a deal. And then they come to us, sat on a massive bridge, have had no education, don't know how to do it, and find they can't get the title split done and they can't get off the bridge. And the only way is to re-bridge. And they're paying thousands and thousands and thousands and thousands of pounds in interest because they didn't know how to do this properly at the start. And I say to people, don't end up in that position, because that is scary. You don't know what you don't know. That's it.
Absolutely. Absolutely. And I want to thank you for that. I have had another question, but I can email that into you.
You can ask it if you want. I'll do one more and then we'll go.
Okay, perfect. Appreciate that, your time. So it's John and Vasco have come in thick as our agents.
Well, I hope they're going to be on my masterclass.
I was going to say the same thing. They've come in with loads of questions, so hopefully you'll see them again. So John's asked, I have 4 buildings that could be title split. Is the uplift in value likely to still be worth the cost of the title splitting and getting the individual mortgages, etc.?
Yes, and yes. So the answer, so you've got those buildings already. Think about the landlord that I showed you with that capital uplift. You would be crazy not to get them split and do this properly. It is hundreds of thousands of pounds.
Amazing. Thank you for answering that, Rachel. John has actually said that he's inquired about the London Masterclass, so hopefully you'll see him attending that one. Okay, so thank you so much. I pretty much asked all the questions, to be honest with you. So it's been an immense episode today. I really do want to thank you, Rachel. You've been absolutely extraordinary. It's been mind-blowing to see how you can deliver a strategy and increase, investors' cash pots in such an amazing way. We have somebody joining now. I think the time frame might be a little bit unusual, but I want to thank you for that. It's been incredible. For anybody that is wanting to know how to do this, you have got the QR code, should I say, because you have viewed this through Sourcing Investments. Rachel and her team at Title Split have been very generous in offering this discount. It's usually £97, as you can see, but they are offering it to our viewers for £37. If you are on the platform already, you will be able to see them as our Power Team member. This is where you'll see Title Split with Rachel and the team. You can go through this, but the offer is there as well. And there's a lot more stuff that you'll be able to do. There's free downloads, etc., and stuff like that. So please feel free to visit the website. If you're not registered to the website, it is sourcinginvestments.co.uk, where you'll be able to find Rachel's Power Team on our dashboard there. So without further ado, I want to thank, we've had heaps of guests today. It genuinely is, that coffee wore off, hey. It genuinely is a very interesting and complex strategy that you've delivered and given us an insight into, Rachel. So I thank you for that. And I want to thank our live guests. We've got B, Che, I hope I pronounced these names properly, Glenn, Hodge, HP, ProBook, I don't think that's a name, or it must be a laptop, James, Jan, John, Mary Minhaz, Musa, Stella, Tim, that's not you, Tim, that's another Tim, Vasca, and we've got Wise iPhone as well. So, and some people joining right as we're signing off. So to everyone who has watched with us live, thank you so very much. And to those of you that watch on the replay, I thank you as well. And as always, with any questions that you have, please feel free to send those into admin@sourcinginvestments.co.uk and we'll direct those to Rachel, or you'll be able to get in touch with them directly through the dashboard. Okay, for now, Tim, thank you for joining us as always. And Rachel, it's been an absolute pleasure.
Thank you, Bonnie. Thanks, Tim. Take care.